Hello, my name is Mike Swanson, and I run the website WallStreetWindow.com. And the odds are that you're finding out about this new video because you got an email from me by being on my email list. Now, if you're not on it, click the link associated with this video because you're going to want to get all my future market updates. This is an interesting day, and this has been one of the wildest weeks we've seen in the financial media and the mainstream media when it comes to the stock market, because the story about GameStop and this WallStreetBets Reddit group just took over the entire news cycle and created a mania, in fact, a rush. The Robinhood app became the #1 most downloaded app in the Apple Store for a couple days last week. The WallStreetBets Reddit group went from about 4 million members when I was looking at it, I think it was Wednesday, to about 7. So it's 3 million people. And the silver market made a wild move to the upside yesterday based on talk on that group that they're going to try to create and engineer a short squeeze that brought a panic buy, let's say, in physical silver over the weekend. Dealers reported a shortage on eBay. The prices were trading crazy, and then we saw a gap up. However, today silver is down, and this demonstrates that the WallStreetBets group did not have the power to create a short squeeze in silver. In fact, this morning I wrote an article on my website. Let me show it to you. And then we're going to dig into who these people really are behind GameStop, because the biggest myth is that it's all some sort of small little group against giant hedge funds. That is the farthest thing from the truth. And that's a story that's been perpetuated by the media, believed by many, and caused many to buy the stock that are now really getting hurt because GameStop shares, as we speak, are trading down 57%. That's a massive decline. But what I wanted to also show you is what's going on. So with silver, I wrote this article this morning saying it's basically impossible to create a short squeeze in silver. The silver market's so big. And not only that, but much of the short position is held by producing companies that own the physical metal, and they're using their short position not to speculate, not to trade, but to hedge things they own, lock in the prices, and they're not going to get squeezed. And what today demonstrates was a failure of that story. But much of the stories around the WallStreetBets group are not true. First, let me say, I own silver mining stocks. I'm bullish on them despite the drop today. It doesn't, to me, it's just a blip. The past 72 hours is a short-term trading blip, and we'll move on from that. But it was a myth that they're going to be able to short squeeze silver, and it's a myth that they solely are responsible for the rise in GameStop. It's a myth that the GameStop story represents a battle of all these little tiny traders that successfully squeezed out and crushed a couple of giant hedge funds. Yes, a couple of giant hedge funds lost money, but the real winners on the GameStop rise were other giant hedge funds. That is a story that somehow conveniently was not talked about on all these talking news shows and radio shows, because they wanted to stick to this theme that this is a story of the little guy, and it's not in this case. It's just another typical story. This is what happens in the financial markets. You get big players that are in stocks. There are very few stocks in which it's controlled by all these small little people. And the reality is the GameStop stock actually started to go up in November, and the move started to accelerate in December. And if you look at this simple information, go to Yahoo Finance, type in GME, that's the stock symbol down, falling more as we speak going into the close. But look at this. These are the major holders broken down by insiders and institutions. And the maddening thing about this is that if you combine insiders and institutions, those two groups are on margin. So the number, the percentage of shares owned actually by small traders is dwarfed by the number of shares owned by institutions and insiders. Insiders are people that own more than 5% of outstanding shares, or else they're on the board of directors. And here's a list of the top 10 institutional holders right here. FMR LLC owns 13%. BlackRock owns 12%. Vanguard 7%. And below that is where we get very interesting. These FMR, and these tend to be ETFs and stuff. So I'm kind of, they're not as fascinating to me as these other groups of traders right here. And if you dig deeper into who these people are, what you'll discover, if you want to take the hour to do it, is that some of these are hedge funds that bought in December and actually took a percentage of their money and bought giant positions for a hedge fund, which is very unusual to say the least. And I'll just show you one example is this company, Permit Capital LLC. Well, that is a hedge fund. And if we go and look at the website, Whale Wisdom, they give us a quick way to look at some filing information about this hedge fund based in West Conshohocken, or Conshohock, I don't know how to say it. It's in Pennsylvania. But this is a hedge fund with only 6 clients that now has holdings worth well, as of March the 30th, they had assets under management of $506 million. Now this hedge fund is worth several billion. Much of that gain is thanks to a massive bet that it entered on Gamestop. So if you want to look at who's made the most money on Gamestop, it's a fund like this, and the funds that have been liquidating through the start of last week into today, as all these small people got rushing into the stock because it went up and it made national news, and they wanted to be a part of a news story of the little guy against the giant hedge fund. But that's not reality. The reality was the giant hedge funds were part of the game to the upside. They may have been most of the driving factor of it until recently, when it did take on a life of its own. And no doubt the WallStreetBets helped create a mania, but the initial push was generated by big money, big capital, and that's how the markets work. And that has not changed despite what people thought the story meant. And if we look at this right now, GameStop makes up 3.5% of this fund's holdings as of December 31st. So this data is actually several weeks old. So we would have to go look at updated filings to find out if this fund in particular is sold. But it's very fascinating that here's a fund with 6 clients, just a small number of clients. So it's an LLC essentially operating as a front for a very few number of people. Let's look at Paradise Investment that owns 2.63% of all outstanding shares, and we'll find similar information on Whale Wisdom. So here is Paradise, based in Denver, with only 9 clients, assets under management of $3 billion as of September 28th, and it's one of the biggest shareholders also in GameStop. So when we see what GameStop has done, it went up in November, December, a little bit in January, and then it obviously went completely crazy. But it's the guys that got in before the move, they're big money guys, and they're the ones that profited the most, while all the people that bought because they saw it in the news last week are getting absolutely killed. So this idea that here's the story of the little guy, get in it, and we're going to beat Wall Street. Well, I wish the reporters would have told you that it's massive hedge funds that got in and started the move to begin with. And the sad thing is all these people open up Robinhood accounts and piled in to things such as GameStop. And now GameStop is the 8th most owned stock by the most number of people on Robinhood, when it was towards the bottom of the list at the very least 2 weeks ago. May not have been even on the list at all. But even more disturbing is the number one stock is now AMC Entertainment. And it wasn't number one this morning. It wasn't number one over the weekend, but now it's number one. And what's this doing? It's down 40% right now. So this is another stock that WallStreetBets was really pushing, that was in the media as a short squeeze play. Another one you're supposed to beat Wall Street with. And anyone who bought in on the basis of that story, on the basis of what was being talked about on WallStreetBets over the past couple of days, is now down 40%. They're getting absolutely crushed. And this is the most owned stock on Robinhood. This is a day of doom for Robinhood traders. And it's all because of this misleading story. If only the reporters that were pushing it, if only the people on the radio that were using it to fit their agenda would have taken an hour or two to ask themselves who owns the stock, they wouldn't have trapped so many people in it. But they have done that. And now so many people are suffering. But look, they're not innocent either. They should have taken the time to verify the story before they threw their money at it. It takes work and research to pick out stocks in the markets. You have to have a trading method. You can't just buy based on, I heard something. You got to verify. And so that's my thoughts today. The good thing is this isn't having a real impact on the overall stock market. In fact, the Dow is up 500 points today. Oil is up. Not everything I own is up, but some stuff is. I own a lot of silver and mining stocks. They're down today after having gone crazy yesterday, but that's them. But one other thing I want to leave you with that was very misleading in the media that was promoted by various politicians, both Democrats, both Republicans, Fox News, on the opinion shows on the other channels, and that is that Robinhood was somehow working on behalf of hedge funds by preventing small traders from piling more into GameStop by restricting them to only 5 shares. Well, what they're not telling you is that a stock brokerage like Robinhood also operates as a bank. They lend money to their clients who want it on margin to go and borrow money to buy more shares of whatever it is. And this creates risk for the clients. What if someone took an account worth $10,000 and borrowed money to buy $20,000 worth of GameStop yesterday? Well, today, those people would be getting margin calls and completely annihilated. They would blow out their entire account. But the brokers that act as banks by lending money on margin, lending securities to those that want to short, and so forth, they also take a risk. If, say, AMC is now the number one stock, if all their clients put 10% of their money in AMC and a good portion of those clients also go on margin and AMC crashes and it's already down 40%, then Robinhood could default on all these loans it's lending out to people and the securities and completely collapse. And if that were to happen, all the customers' accounts would go down the drain, even if someone's doing safe investing and they just think, I'm safe, I'm not doing anything risky. The whole brokerage house would fail. And the brokerage accounts are only insured by, I think it's $500,000. Well, what about someone who's got $1 million in a brokerage account and the broker fails? They'll be sitting there hoping to get half their money back, and it could take months to do it, and the rest of the money would be completely vaporized. This is why Robinhood, Ameritrade, and other brokers had to limit the trading on GameStop. Imagine if more and more people got trapped in it, going on margin and so forth, and they let this happen without limit, and now it's collapsing close to 60% as I'm speaking. You could have seen brokerage houses fail in parts of this country, even a major broker. Millions of accounts could have been vaporized. That's why Robinhood had to restrict trading and other brokers. It's for not simply the safety of the customers, but their own balance sheet itself. You don't want a scandal or a crisis like what happened in 2008 when banks went under because real estate went under. What happens if banks lend money to buy stocks and the stocks go under or collapse? That would create a financial crisis. It would create destruction of people who aren't doing anything risky, that aren't gambling in these crazy, nutty stocks or based on silly news stories. So this is the situation that really has unfolded over the past week, and it's turned into an epic disaster. And that's why I didn't really say that much about it myself. I wrote an update to my private members Sunday with my thoughts on this, but other than that, I didn't really have much to say because I didn't want to get caught up in what everyone else was saying. Everyone was grasping onto this story for attention and this narrative that you can say, oh, this is about the little guy against the big guy, because it appeals to so many people to hear that. And that's why that was echoed everywhere. And now that narrative has completely crumbled and fallen apart. And there's so many people out there that have, by promoting that narrative, have sucked so many people into stocks like GameStop over the past couple of days, and now AMC #1 on Robinhood. What a disaster. So the good thing is it's just a small disaster. It's not anything like what happened in 2008 real estate, but wow, a fascinating thing to witness in the markets. What are the implications of all this? It tells us a lot about how the American media works and the online media. Both actually came together. If you think about it, the mainstream media and the so-called alternative media both were saying the same song on this GameStop, because neither did much analysis of the situation and were ready to grasp on the narrative that they knew would attract the most clicks, the most hits, the most eyeballs on the television set. And now we're here. Now we're in a wipeout of 58% as we go into the close. So that's my thoughts for today in the markets, and I'll be talking with you later once I figure out how to stop the video.